Astonishing results coming in from Bihar. The battleground of Bihar has been demolished, one done and dusted. It's quick, fast and furious. Just telling you about how clear-minded and clear-eyed the Bihari voter is. She's very, very sure what she wants, who she wants to vote for, and has been empowered. Now the world can say, oh, freebies.
Because this is
I love
true.
that.
This is the women's
I love
vote.
I love how you are addressing that. That she's clear-minded, she's doing this because that's what's happened.
It is her victory.
It is her victory. It is her victory, and it is showing that you look at women voters beyond just a constituency and make their lives better. Then they come out and vote. So much to pick from takeaways of this election. First, the numbers: 243 out of 243 leads out. NDA has not just won; it has smashed this election. Mahagathbandhan has been reduced to 77 seats. As far as the leads are concerned at this point. So a big drop over there. We'll have to see what his Jan Swaraj actually opened at, but nothing really much in terms of having an impact. It's all about Nitish Kumar today, isn't it? And that alliance making it through. You will have, of course, some boost to what this means for the central government. You're seeing it in the markets as well. So what are we bringing you today? We're bringing you Bihar election results with a market perspective, which is relevant for all of our viewers here at NDTV Profit. Pankaj Murarka, CIO, Renaissance Investment Managers with us. We're joined by Surjit Bhalla, economist, author and columnist. Welcome to both of you, and thank you so much for speaking with us. Surjit, I'm going to start with you and your take of what's worked. We talked about a note this morning from Christopher Wood, Jefferies, and in his Greed and Fear column, he has raised concerns about the freebie culture which was seen in the Bihar elections. Now, some will say that that is what has won the NDA, the elections, the largesse which has been offered to women voters, etc. How do you see it as economic impact?
I think, coming first to the freebie and the 10,000 rupees, I think had zero effect on the election. And I've said that before the election. So we need to ask, why was it introduced? And why was it done? And I think I would agree with Christopher Wood. This is a terrible sign. It comes with Prime Minister Modi has gone out of his way condemning the freebie culture. And here is his ally, which I would presume is also him, endorsing this. So, and particularly since it was not needed, if you look at the record of the NDA, and in particular the Nitish Kumar's record, JDU, you find from the last 20 years that he's performed rather well. Not in growth terms as much, but even in growth terms, it's still at the bottom. But what is revealing is that the opposition, there was no opposition, there is no opposition. And the figures show this. Mahagathbandhan at 77. This is a 2-1 victory, 2/3 majority for the NDA. And I'm willing to argue, debate with anybody whether the freebie was needed. There was nothing. So therefore, we need to ask that question as to why was a freebie given? Is it so lax that you can just about do anything the government wants when the opposition is very weak? So that's my question.
And it's a fair question to ask. I guess this debate, Surjit Bhalla, will go on for the rest of today as to what really was the clincher, because at this point, as I'm looking at the screen, the share or the leads for JDU, as things stand right now, at 75, 43 was what they had at the same time in 2020. So they've got a higher share by as much as 32 seats. Similarly, BJP is more or less where it was at this time in 2020. So it's retained its share. I want to come to you, Pankaj, on, of course, we're speaking on the day of the Bihar election results. How much attention do you give to state elections? And purely from a sentimental standpoint, because this indicates stability politically, even in state elections, what do you take from the lens of the market?
Well, from I think market's perspective, clearly markets are not concerned about it. as it is, the prognosis that came before elections, it seemed like it's going to be a foregone conclusion that India will come back. And I'm just saying, just in case had they had a narrow victory or a reversal, I don't think so. Market would have been too concerned because the central government is pretty much comfortable in terms of the majority, and they're still just about year and a half into their tenure. So I think it does not impact as much from a market perspective. What markets are really looking forward to once we have political stability at the central government level is more about a growth outlook, global issues around tariff headwinds, and which all has a trickle-down impact in terms of corporate earnings growth and investment cycles. And probably, I think the bigger thing market would look forward to is probably the upcoming budget, because this year has been a year where we've seen it started on a note where the economy had slowed down considerably, and we have seen both, the central government and RBI pitching in terms of fiscal and monetary stimulus that has been infused into the economy. So what kind of growth recovery we have from the lows that we've seen, what kind of cyclical recovery that economy faces, and what does that mean for earnings growth going into the next year? I think those are matters of consideration or data points that matter to the markets.
I'm sure Surjit Bhalla has a strong view on this, but Pankaj, I want to come to you. Do you believe, first on this, do you believe that this could result in a perilous situation for state finances over the course of the next couple of years as more states go to fight and this becomes more a norm rather than an exception?
Well, Surjit will have more comment on it from an economist lens, from a markets lens. I think that's become the template. We've seen that, right? From state after state, that's been a template that's been followed. Maharashtra followed the same template, and it's somehow helping them get back to office when elections. So India's state fiscal finances, as it is, if we see over a period of time, have, states have run fairly high fiscal deficits. Governments few times have trying to push states or nudge states to get into fiscal consolidation by escrow mechanisms, by holding back their grants and stuff like that through escrow, through RBI and all of that. Aggregate India's fiscal deficit, central and state taken together, is reasonable, I would say, though I think states still have some tightening to do, but I don't see that happening in the near term.
So, Mr. Bhalla, I'll take this same thing to you, right? I mean, there are some states where the state finances are okay, some where there are not. Could this lead to a perilous situation at some point of time in the next couple of years? Or do you reckon that states will strike a balance between giving out freebies to, win elections versus managing what could be a reasonably respectable fiscal situation?
Look, it depends on how the center handles it. The states legally are not allowed, or in practice are not allowed to go much beyond 3%. And I think it has to do with the macro choices. I would say I'm not that pessimistic that this situation will get out of hand, for the simple reason that I think there are various macro controls that are in possession of the government. For example, interest rates are way, way too high. We are running a real interest rate of something close to 5. So let's not take the latest one. Let's make it 4. Let's not take that. Let's make it 3. I mean, a 3% real interest rate is abominable and way above what most other countries, indeed, I don't know, I'm working on this, no other country has this high a real policy rate. So I think I'm hoping that sense will prevail, interest rates will come down, the economy will grow, and that will take care of the deficit not going out of hand.
Okay, in view of how the markets were looking at Bihar, Mr. Bhalla, I'm actually going to come to you on this point. The markets had decided after the exit polls and seeing what the polls were showing that this is a foregone conclusion. The reverse would have been a bit of a concern with a question mark on the alliance at the center. Now that's clearly out of the picture. Is there then positive momentum that comes in terms of how the central government sees further stability and how markets would be viewing it? Just wanted your thoughts on that.
So, look, the big issue for the government and for our economic growth and for policy is what happens on the trade deal. That has been continuously postponed. And I think that will be the clincher one way or the other in terms of where India proceeds. For example, if you will, if we don't have a significant trade deal, I'm not talking about naam ke vaste trade deal, but a significant trade deal with the US, then I'm afraid we are looking at best, a real GDP growth rate of somewhere around 6.5%. And that is clearly way off the charts for what is needed for Viksit Bharat. So I think the fiscal deficit issue that we're talking about is really secondary. The primary issue, in my view, is where does India's growth rate go, and do we proceed towards Viksit Bharat, or are we staying in the doldrums of 6.5% GDP growth rate for the last 35 years? So let me repeat, I don't place that much emphasis on the fiscal deficit. I think the handouts or the freebies were absolutely unnecessary. And I think the government should try and explain as to why it was done. And last but not the least is the trade deal stupid, as Bill Clinton would say. So let's wait and see. I hope the trade deal happens and that it is a significant trade deal. That will change the map. That will change any discussion about markets, any discussion about stocks. If not, we'll continue rolling along as we have.
Rolling and inching along. I think one positive imperative has also been that the corporate performance in the second quarter has been much better than expected. Welcoming on board this conversation, Kanchan Gupta, Senior Advisor, Ministry of Information and Broadcasting. Mr. Gupta, great to have you on NDTV Profit. We're talking about Bihar and Bazaar this morning as we look at the impact on markets, sharp recovery from the lows of the day as the mandate becomes clear. How do you see this mandate? How would you look at it at this point? It's more than just a pro-incumbency vote, isn't it? Is it women voters responding to the 10,000 rupee payout? Is it a thank you Nitish Kumar vote? How do you look at it?
I think let us not overestimate this 10,000 rupee thing, that just because 10,000 rupees were given to some women voters as part of the social welfare measures has resulted in this kind of a result. Now, these are early times. The numbers will change, but more or less what we have before us is a very resounding endorsement of the BJP-JDU alliance in Bihar. Now, this could also be projected at the national level as sort of a public endorsement of the government and its policies, and the fact that people are still positive about the third NDA government. Number two, I think the amount of economic activity which we are now likely to see in Bihar, because certain commitments have been made, and frankly, they have to now start delivering, because the alliance, for the alliance to stay afloat and to carry forward the mandate, that delivery has to happen. Some amount of work has already been done. There is bound to be greater work, especially on the infrastructure front and setting up industry in Bihar. Three, when all that is added together, you get you have a national impact on the economy, and as Surjit Bhallaji was saying, that if your rate of growth goes up and you are then seen to be moving towards what the Prime Minister calls Vikasit Bharat, and that plus the positive sentiment generated by the Bihar election, I think the markets should be reacting positively to the outcome, and the coming days are also going to be on the same lines.
On that note, Kanchan, let me ask the market man here, Pankaj, what he thinks about this. Because ultimately, Pankaj, if we're talking about spending by some of these governments and that capex cycle on the government side kicking in, what according to you would be the implications, and do you anticipate that that will happen? Because to a certain extent it hasn't been as high as it has been in previous years.
Well, from a market's perspective, my simple view is that one, this election outcome was a foregone conclusion because market was clearly expecting that. From a market is more, many markets, as I said, is more interested or looking forward to in terms of the cyclical recovery that can be anticipated in the economy. And while I'm very happy with what Mr. Surjit Bhalla said, because this is the first time I'm hearing from someone in Delhi who's really thinking that 6.5% growth is not good enough for India. While it might still place India amongst the fastest growing major 20 economies, but it does not get India where it wants to be. So someone sitting in Delhi calling that out, I'm pretty pleased to hear that. But having said that, because apart from looking at top-down macro data, because we look at companies from a bottom-up perspective across sectors, and we look at over 500 companies, and we understand their business plans over the next 3 to 5 years. My inference or assumption is that we don't see a significant material. One, private capex has been insipid all through post-COVID, and I don't see that materially changing from where it is, kind of a thing. So this is going to be a fairly lackluster investment cycle from the private sector. I think the government capex is at its peak given government finances. We've seen a very sharp increase in government allocation towards capital expenditure from where we were pre-COVID at about 1.5% of GDP to about 3.5%. But I think that I don't see that number increasing further from here on. So I think the aggregate growth in government, in central government investments will be in line with nominal GDP growth at about 8 to 10%. So I think probably this is my inference that the Indian economy has had a downward reset. 3 years out of COVID, FY21 to 24, the economy grew at 8.4%. It's now we are in the second year where the economy is growing at 6.5%. And to me, that's the new normal for the Indian economy, at least from a medium-term perspective over the next 2 to 3 years. Even if we get one of the best trade deals from US, it takes a while for trade deal to translate into trade and to have a trickle-down impact on growth in the economy and so on and so forth. I don't see that will change. While that will help sentiments and we badly need it, but I don't see that will change our growth over the next 4 to 6 quarters. So I think in the medium term, we are probably poised for a 6.5% economy. And as again, Surjit highlighted, meaning that's been our Hindu growth rate for the last 35 years.
Yeah.
So
No, entirely. I think, we are also showing on our screen listed companies that have an exposure to Bihar. We need to start hearing about Bihar in a different context now, and not just about, the poverty lines, and we need to see some growth there. So Kanchan Gupta, on that note, before we close this conversation and we're talking about Bihar and Bazaar has already baked in Bihar and has moved on to other concerns right now because it works in a forward-looking way. But having said that, what do you think we should look out for as a change? Because a pro-incumbency vote also comes with higher expectations. I mean, that's a fact. This is faith that has been redoubled and expectations have also gone up.
Well, what this result reiterates is that the popular trust still rests with the BJP-JDU combination in Bihar. And you are right, that will automatically generate greater expectations. And it is a challenge, or it will be a challenge for the government to deliver on those expectations. But, I mean, to say that we cannot go beyond what has already been done on the capex front, I think that is not entirely correct, because if the government wishes to, the government can continue to spend or spend more on capital expenditure, essentially on infrastructure development, and for Bihar that is important. And lastly, I would like to say this, that there is always this apprehension about political change and what it will mean for the future, whether there will be turbulence, whether there will be social turbulence, political turbulence, cultural turbulence, and that keeps investors away. But here we are assuring a continued political stability, a continued predictability of policy, and that these two things together should bring around investors
Yep.
and convince them, as the Prime Minister would say, yahi samay hai, sahi samay hai.
So investors also come when there is an atmosphere which helps industry grow, enough labor available, and not just subsidized lands. So a lot will need to be done on that end, and I'm sure that will definitely be on the agenda. But Surjit Bhalla, Kanchan Gupta and Pankaj Murarka, thank you so much for joining us on this special edition where we talk about Bihar and Bazaar. As we wrap this conversation up, just talking about where the leads are at this point, and it's astonishing. If you really look at the breakdown of these results, this is Nitish Kumar all the way. If I look at just the JDU breakdown, out of that 162 for the NDA, you have 75 for the Janata Dal United, which is an increase of 32 seats. This is Nitish Kumar pulling this on his back. I mean, if you look at it in a nifty parlance, he's the heavyweight in this index right now. The BJP at 74 seats, of course, huge, but down 4 from last time. The LJP has come in also in a big way, up 11 seats. So big changes there within that whole breakup of the NDA, which have pulled forth the BJP and JDU neck to neck as alliance partners. Nevertheless, they're so far ahead of the halfway mark that there's no question over here. Who has really lost out? It is the RJD, which has been the big loser for Tejasvi Yadav. This will be a concern. 15 seats down from last time. Congress has lost 4 seats as well. So that is where the pain point has been. Prashant Kishore's new party, Jan Swaraj, has 2 seats at this point. So that's the election roundup.